the closed loan fallacy, a single letter in the mail, an occupancy form, a tax notice, a default warning. Each of these can quietly set foreclosure in motion. This week, probate expert, podcaster, and mortgage broker Bill Gross reveals why so many reverse mortgages unravel after closing and what reverse mortgage professionals can do to help protect the homeowner and their heirs. We'll get into all that in our exclusive interview right after this short word from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back, and thank you for joining us, ladies and gentlemen. This week, we're addressing an issue that is all too common but rarely discussed, and that is what happens after closing, and more importantly, what can unravel after closing. And for that, I bring our friend Bill Gross. He's a podcaster, probate expert, and also a mortgage broker himself. And so, Bill, thank you so much for joining us. And tell us just a little bit where this idea came from of the, how these things can unravel so quickly.
Sure. Well, I have a little bit of background. Actually, I was a mortgage originator up until 2008. And at the time, I actually did a couple of reverse mortgages, what I call the 1.0 version, the older version of it, that was very much abused, and there were a lot of problems with it. But I did a couple, and I thought it was a very powerful product, loved it. Became a real estate broker full-time at 2008 when the market kind of crashed in mortgages, made the decision to pivot. And then about 6 years ago in 2019, focused 100% on probate and trust real estate. And what I noticed was increasingly, properties were being inherited by families. They had reverse mortgage on it. But almost every single time, it was a nightmare scenario where they discovered they're in foreclosure. And it didn't have to be that way. When I really went through the details and the process and researched it, what I realized was that this was contributing, I think, to the negative publicity about the product. I think we, as an industry or as a country, we should be doing about 10 times the reverse mortgages that we are, but for the bad publicity. And this is one of the key areas. And I said, well, since I'm getting this business, maybe I can try to help fix things upstream. And so I looked into it and realized that there was a couple fallacies that people weren't taking seriously after they closed the mortgage or when the parents passed and they had a reverse mortgage. And so I actually launched a podcast a little over a year ago, and you were one of the people that I reached out to, and I've had a number of people affiliated with your program as well as guests, and learned a lot about this. So this has become an area I've really immersed myself in, because when the borrower dies, if it's a husband and wife, and then the second the two pass, then the loan has to get paid off. And the family, if not prepared, is going to have difficulty getting that done. That's where I step in as a real estate broker and help them get the right solutions, probate, introductions of probate attorneys, things like that.
So let's talk about the problem, and more specifically, how reverse mortgage professionals view closing.
Yeah, I call it the closed loan philosophy fallacy, in where we all tend to be too transactional. And you feel like, well, it's reverse mortgage, unless they refinance it, I'm done kind of for the rest of their life. And I think the thing I noticed was the great originators don't look at that way at all. They look at that client as a client for life and as a source of referrals for life. But if you don't keep in touch with them, when they pass, the people inherit the property, have no idea who you are. And now they have this loan that's due and payable that they have to do something with and may not know what to do. And like many people, and so if they're not engaged with an originator who specializes in reverse mortgages, they're going to get a lot of bad information. One of them is, oh, you have 6 months, which is true, to pay it off. And then you get extensions. And what I'll say is, well, when you read the documents, it says that the lender may extend you past 6 months, but the reality is they don't. At least in California, they never do. It's a race to foreclose. And so what I try to tell people, what I tell originators is use the annual review on your reverse mortgage as the opportunity to stay in touch with them every year Ask them who would help them if something happened. Ask them who would step in if they were incapacitated or were no longer available, so that the property gets passed properly. Ask them if they have an estate plan set up or not. Get involved in that process to bridge that fallacy. But the idea of just doing a transaction, moving on, I think is the root cause of the problem most of the time.
So I like the term you used, servicing gap. Can you explain that a little bit more, how it relates to the reverse mortgage borrower and homeowner?
So when we do mortgages, the business is such that their companies will pay us to put a loan on the books. And they're not often the same people who are paying us to originate the loan. So you might work for a company that's very customer service oriented to get the business, but the people in the back end are just some financial or investment company in many cases. Or even if they are not, if they're one and the same, they often sell the loan as soon as it becomes due and payable, and it ends up just being a servicing situation, which leads to foreclosure. So what I say is that we should, as originators, look at that book as our business, like an insurance agent.
Yep.
Regardless of the company's perspective or who's servicing it, we originate the loan. They're our relationship. There's no Google or Facebook ad that's ever going to pry me away from my customer if I do my job of creating value for them over the life of our relationship. And so I think the gap there is we look at, well, the company sold the servicing or the company is no longer involved. We need to take the initiative as professionals and stay in touch with our clients and build our network of referrals based on the people that we've earned good trust and good work from.
So often there can be a psychological toll that the borrower undergoes in certain situations when it's related to servicing and others. Can you explain that a little bit further?
Well, I think that, there really isn't an easy loan. I mean, I think, and I'm a real estate agent, there's no easy sale, there's no easy purchase, there's no easy mortgage loan, there's no easy reverse mortgage loan. They're all tough. And I think sometimes we feel like, okay, thank goodness it's done. I got paid, they didn't kill me, they didn't back out, and I'm going to move on to the next one. And we had the chance to repair those relationships. In fact, if you think about any relationship you have, it's working through the problems that build the relationship, not the absence of problems. I've been married 39 years. I tell people one day at a time, and I'm not through the day yet today. I got to get through the rest of the day today because you have to earn it every single day. And I think the same is true of our business relationships. And if we look at those people we did business with as a relationship, yeah, the loan was closed, it was tough. Yeah, there was a bunch of paperwork at the end. Maybe the lender glitched on the rate or the fees or something happened. But if we're there and we're doing our best, people appreciate that over time. We've earned their trust. We've earned that relationship. And so I think it's really important to stay in there and build that relationship so that it goes beyond the transaction and becomes a piece of business in the long run for us.
Well said. I call these the three horsemen of the apocalypse, reverse mortgage apocalypse, when it comes to foreclosure. Can you kind of explain how these things can unravel so quickly? You list three specific events that are pretty common.
Now, well, one's death, obviously. You have a husband, wife, and one or both of them pass. When the second one passes, you have a loan that's due. You have health issues where they no longer use the house as their primary residence, and or they need the equity from the house, and so now it becomes just an asset they have to sell, and or they're going to move to another area or relocate. And I think when these things happen, we want to be part of the solution, not part of the problem. And so if we're there, sometimes a new reverse mortgage is a solution, sometimes not. But we want to be there to help them through that process and know what it is. And I think more importantly, even prepare for those eventualities because something's going to happen, right? They're either going to die or going to sell the property at some point. And protecting them by planning ahead. And in California, that most commonly includes estate planning and a trust. In many states as well.
So the occupancy certification, that's obvious on the surface, but it's often forgot. And then we have property charge defaults. So you're really, I agree with you. I think the occupancy certification is a great reason to reach out to the previous borrowers and just say, hey, have you filled it out? And if you have that date in someplace, right, like in the CRM, or you can get to that date and schedule that call. The other is the...
About that.
Yeah.
I assumed originators did it. Like if I had a reverse mortgage company, I'd make originators get that to get paid, or I pull back the commission or half of it, they get paid. I think it's so important. And originators will say to me, well, I'm just so busy. And I say to myself, well, how many reverse mortgages have you done in your life? Did you do 200 of them? That's one a working day a year. One,
Right.
one a day. Like if you did 400, that's two a day. What better phone call do you have than a customer you did business with last year, a year before, and then preparing them for the inevitability of selling their property? And that means either you're helping them with their financial planning or their real estate planning. There's all kinds of opportunities for business, but if you focus on helping them, the business takes care of itself.
Absolutely. And I think that, that mindset of service and being there for the borrower or their adult children, it naturally will bring you business in many cases. So we had some statistics here, and we talked about the 22% gap. Explain that a little bit more for us, Bill.
So 22% gap is that only 22% are in default on a repayment plan, and the rest go to foreclosure. So what that means is people will get some sort of maybe a reason why the loan's being called due. And that most often is going to be that they're no longer is their primary residence. And so they have to do something with the loan. They got to pay it off. And sometimes they're not in a position to pay it right away. The other reality is people have regular mortgages. And so many of them are in foreclosure because their income's dropped off, their business has dropped off, physically they're not there to write checks, the money's tied up in various places. And so it's important that that they go from, and even if you go to a repayment plan, most repayment plans end up in foreclosure as well. And so it's really important to understand that when that transition happens, you need to be thinking about what is the long-term game plan here, not just what can I live here for free and for how long, because inevitably that living there free is going to happen. And I also think the other reality is it's often a lack of communication. There are lenders who will not talk to you without the formal legal authority, which in many cases means filing a probate and being appointed the administrator or the executor. But most companies will appreciate the phone calls early and say, look, I know you can't do anything. I'm just putting you on notice. We're applying for it. We're working with attorney. We're doing the best we can. I feel like in any business, the rule might be that they don't have to listen to you. But if you're making your effort, I have seen cases where people got a little bit of a break. And the idea is you don't want the loan sold from the company that's doing the reverse mortgage to the foreclosure-oriented servicer. You really want to hang on as long as you can to the other company. So again, whatever you can do from a communication point of view, you should try. It doesn't mean you're just going to solve the problem. Like one of the things I say a lot is, yes, all these mortgages, they promise the possibility of extensions, but it very rarely happens. You can be the exception, but the exception is going to go to the person who's in communication with that lender.
Very good point. And there's almost that sense of shame when something kind of goes haywire. The homeowner doesn't want to acknowledge it. And then also they're embarrassed or shameful that, hey, I fell behind on my property taxes. So I think that really speaks to what you're saying, is that the originator needs to be in contact. I would venture to say twice a year, just saying, hey, how are things going? Not just the occupancy certification, and really keep in touch with them. Because I think, as you say, that not only the communication with the homeowner and the servicer, great point, but with the originator and the borrower too.
For sure. Yeah, you're talking about property taxes, and another one commonly now is HOA, where there'll be a supplemental assessment, $10,000, $20,000. And if you're on a fixed income and you might have, more enough coming in every month to cover your expenses, but a sudden $10,000, $20,000 assessment or more in Florida, we've seen $100,000 assessments, for example. And depending on the servicer, they may or may not accept it. So these are things that require communication up front and a quick game plan. Maybe you need to redo the reverse mortgage. Maybe you need to borrow some money somewhere else. Maybe you need to borrow against some securities part-time and then borrow against your reverse mortgage when the value of the property goes up over time. So there's different strategies, but the key is you got to jump on that right away. Make sure that you don't get into a position where the lender says, hey, you're behind your taxes now, we're going to foreclose on the loan. That's a very expensive proposition.
So you made something I found was useful, the reverse mortgage checklist. Can you just briefly summarize this in closing and how you can use this tool?
Yeah, I think this is the kind of thing that an originator can use to give to their customers, that lays out to them what the key kind of concerns should be and put the information in a place where somebody can get to it. Nowadays I don't think a week or two goes by where I don't ask the customer or the attorney, do you have a copy of the mortgage statement? Because it will have the loan number on it. And for whatever reason, it's not available. And so I think the reverse mortgage success checklist I created would put all the key information, both to review the warnings and then put it into the servicer's name, their phone number, and the loan number, so that you can, if necessary, call them. If somebody passes, or there's a problem with the property taxes, or there is an assessment, you'll know who to talk to. And so again, it's a document that I created, and if you're interested, you can reach out to me. But we're more glad to give you a copy of that.
I mean, for goodness sake, we just had our air conditioning rebuilt, replaced. They leave you a manual, they leave you instructions, they leave you contact information. I think reverse mortgages should have the same, definitely. And then you have like heirs, emergency plan. This is great. It's like, the emergency contact list that you see in refrigerators. This is wonderful.
Yeah, I think that, if you think about it, you do the loan to mom and dad, but the kids are the ones who have to pick up the pieces when something happens. And so there's just a tool that you might add into your annual review and say, hey, let's make sure this is up to date. Who should be on this list? Let's make sure the loan number adds up correctly to your statement. Or, you can just attach a copy of your statement to this checklist and have it with your other estate planning documents, so that when somebody has to step in and manage affairs, they have all the information to move on.
Absolutely. Well, the closed loan fallacy, I think if we overcome that fallacy, then we can avoid little problems becoming giant problems for the homeowner. Bill, thank you so much. And tell us about where folks can find your podcast.
Sure. So I am on YouTube at Bill Gross Probate is my YouTube channel, at Bill Gross Probate. And on there, I have a couple different podcasts. I'm real proud of the Reverse Mortgage podcast, where I interview Shannon Hicks and other VIPs in the industry, originators. I also have some vendors and some management to talk about best practices. It is really more oriented towards the professional. It's not to a consumer, but more raising standards of service, raising standards of performance, so we can be better at serving our customers. So again, the YouTube channel is at Bill Gross Probate, or you can just reach out to me, text or email. I'll be more glad to send you a link as well.
So we're going to include a link just below this video frame to both of those channels, so you can subscribe. And I know you have an online newsletter. I'll include that link as well. Just a small way we can say thanks here at Heckam World, Bill. And folks, that concludes this episode. If you found any value in today's content, I would encourage you to share it on your LinkedIn network. And speaking of YouTube, as Bill mentioned, he has his channel, and here at Reverse Focus and Heckam World, we'd encourage you to subscribe. That way you never miss any of our latest content. And each and every week, we curate the most recent and I would say interesting reverse mortgage news in our weekly podcast, Heckam World Weekly. We have both an audio and a video edition. Listeners can listen and subscribe on Apple Music and Spotify. That's a wrap for us here. Thank you so much, and be sure to return next week for more reverse mortgage news, commentary, and analysis. And Bill, thank you so much for being here with us today.